Listen carefully, because what I'm about to reveal could save you from losing everything. Because this is the kind of knowledge that separates those who protect their wealth from those who watch it vanish overnight. The shocking truth is this: investment fraud is not something that happens to other people. It's happening everywhere, every day. And the victims are often educated, hardworking individuals who thought they were making smart financial moves. Today, on Profit Decode Global, we're decoding the red flags of investment fraud so you can spot them before it's too late. Decode traps before they catch you. Most people believe fraudsters target only the naive or uninformed. But advanced scams are designed to trick even seasoned investors. They use psychology, urgency, and illusion of credibility. The story always begins with opportunity, high returns, low risk, and exclusivity. That combination is irresistible, but it's also the first red flag. If someone promises guaranteed profits with little or no risk, you're not looking at an investment, you're looking at a trap. Here's the first shocking reveal. According to global financial watchdogs, billions of dollars are lost annually to investment fraud, and the majority of victims are not beginners. They are professionals, retirees, and even financial advisors who got caught in schemes that looked legitimate. Let's break down how these scams operate. Fraudsters build trust first. They use polished websites, fake testimonials, even rented office spaces to look credible. They may show you charts, graphs, or even fake account dashboards that appear to grow in value. The second red flag is pressure. They'll tell you the opportunity is limited, that you must act fast, or you'll miss out. This urgency is designed to bypass rational thinking. The third red flag is secrecy. They discourage you from discussing the opportunity with others, claiming it's exclusive or private. Here's the second shocking reveal. One of the largest Ponzi schemes in history lasted for decades, fooling thousands of investors, including banks and charities. The fraudster didn't promise outrageous returns, just steady, believable profits. That's why it worked. The lesson: fraud doesn't always look extreme. Sometimes it looks boring, consistent, and safe. So how do you protect yourself? Here's the framework. First, verify credentials. Always check if the person or company is registered with financial authorities. Second, demand transparency. Real investments provide audited statements, clear risk disclosures, and independent verification. Third, slow down. Any opportunity that requires immediate action is suspect. Fourth, diversify. Never put all your money into one scheme, no matter how convincing. Fifth, trust your instincts. If something feels off, it probably is. Let's add a case study. In Singapore, a group of investors were lured into a scheme promising steady monthly returns from foreign exchange trading. The company had a sleek office, professional staff, and even sponsored events. For 2 years, payouts were consistent. Then suddenly, the company collapsed, and millions vanished. The red flags were there: guaranteed returns, secrecy, and lack of independent audits. But trust and consistency blinded the investors. Here's the third shocking reveal. Fraudsters often use affinity scams, targeting communities, religious groups, or professional networks. They exploit trust within the group to recruit victims. People invest because everyone else is doing it. This herd mentality is powerful, but it's also dangerous. Let's expand the solution. Always ask 3 questions before investing. 1. Is the investment regulated? 2. Can independent sources verify the returns? 3. What's the worst-case scenario? If the answers are vague, dismissive, or overly optimistic, walk away. Fraud thrives on silence. Talking to a trusted advisor or even searching online can expose red flags instantly. Here's another case study. In the United States, retirees invested in a real estate development project that promised high returns. The developers showed glossy brochures, architectural models, and even staged construction sites. But the land was never purchased, and the project was a mirage. Hundreds lost their savings. The red flags: no independent audits, pressure to invest quickly, and secrecy about details. Here's the fourth shocking reveal. Fraudsters often use technology to create fake dashboards, showing your money growing in real time. Victims log in, see profits, and feel reassured. But the numbers are fabricated. By the time they realize, withdrawals are blocked, and the site vanishes. So what's the ultimate defense? Education. The more you know about how fraud works, the harder it is to trick you. Fraudsters rely on ignorance and urgency. By slowing down, asking questions, and verifying independently, you build a shield around your wealth. Remember, if it sounds too good to be true, it probably is. You've now decoded the red flags of investment fraud. Wealth is not just about making money, it's about protecting it. If you found this powerful, share it. Someone you know might be walking into a trap right now. And let me ask you, what's the biggest red flag you've ever spotted in an investment pitch? Drop it in the comments. Your story could save someone else. This is Decode Global. Decode traps before they catch you. And before you go, hit subscribe and press the bell icon. Why? Because every week we drop exclusive insights that protect your wealth. By subscribing, you'll never miss an upload, you'll stay ahead of the curve, and you'll decode traps before they catch you.